Welcome back. The market's almost back in the green. The mid-cap index, of course, has looked strong, but the Nifty as well, 15,094 now. So from almost breaking 15,000, it's back to 15,100 almost. D-Street Chatter is here. Nimesh will tell us what has he picked up from the dealing room buzz. Nimesh, all over the place today, but what's been the feedback?
Yes, it's been all over the place. A bit of consolidation, so to speak, Anuj. After the big run-up, we've seen some bit of profit booking in bank stocks as well. But NBFCs have relatively outperformed today within the financial names. The FI flows are still very positive, is what I understand, and a lot of individual reactions to the results that are being getting announced. So today is a day of more of individual names rather than looking at index, and a bit of profit booking there. But the FI flow seems to be on the positive side.
Okay, so we'll watch out for what those FII numbers look like in the cash market, Nimesh. Let's come to stocks as well. What's the buzz you're hearing today?
Well, the first stock is Piramal Enterprise. That stock is buzzing in trade. We all were looking for the stocks like Bharti and a couple of other names. But Piramal Enterprise will see a MSCI buy flows of close to $17 million because the weight has gone up in Piramal Enterprise in this review. And hence, you're seeing a bit of a move there in that particular stock. So that's the first stock. Second stock is Grasim. The stock has been on a tear off late. I've been reporting off late that there is a lot of HNI large investors who are active in the stock, and they expect further re-rating to continue, and hence a bit of buying interest in Grasim continues even at this level. So that's the second stock. Third is an NBFC as a sector, is in focus today. I don't want to reveal the name, but the sense I'm getting is one NBFC M&A deal is likely to get announced today evening. So watch out for that. Maybe you can say a bit of rub-off on the entire NBFC space tomorrow. So that's something to watch out. And the last stock is ITC. That's trading at day's low for second day running. I'm getting a sense that there is sell flows at FI desk. Remember, at higher levels, you have this pressure of Sooty selling stake. Not sure whether they are selling. Only once disclosure comes, you'll get to know. But there is definitely some bit of selling pressure in ITC for the last couple of days.
Okay, Nimesh, thanks a lot for that. Mitesh Thakkar is back with us for BTST calls. Mitesh, so tell us, what are you trading?
Yeah. So, Anuj, I have a one buy and one sell call. SBI Life has been a stock which has done very well. So that's a BTST with a stop at 900, targets of 925, and SRF with a stop at 55.35. Very small stop. Take a target of 54.50 on the downside as the short side trade.
Okay, got that. Mitesh, thanks. Let's also bring in Kunj Bansal now. He's our next guest, CIO of Karvi Capital, joining in. Of course, we have lots of earnings previews to go over, so we'll do that one by one with Kunj as well. But first, the reviews, Kunj. Let's talk about some of the metal earnings that came in, Tata Steel as well as Hindalco. The stocks have already run up. Is there anything that you would still back with fresh money?
No, not now, for two reasons. That one, not only the rise post result, which have been good results in line with expectation, in fact better than expectation also. So the rise has not only happened after the result, but even before the result, if we go and see, quite a lot of rise in the share prices of most of the metal companies, specifically these two that you are talking of, had happened. And that was in anticipation of good performance coming in on the back of the continuous price rise that was happening in these commodities, both steel and aluminium. So I think it's time to take a breather, wait for some more time, see how the commodity price going forward, the trend remains, because over a medium term, the prices of these companies won't necessarily be governed by the actual quarterly results and the profitability, but more by the commodity price trends. And only if those prices continue to go up, then that is where we can see the interest coming back. In India, we already have a minister shouting, saying there is a cartelization in steel and we want prices down and all. Not that that can bring the prices down, but all those kind of things might happen, and we might not see the sustained price movement that has happened.
Okay, important numbers coming out tomorrow. There's ITC, there's Ashok Leyland, and there's MRF. And all of these stocks have been quite active in trade, of course. Let's start with the big boy, ITC. Mangalam, tell us what to expect.
Well, for ITC, after the budget, the stock's up almost 10-12% and that makes the fourth and the first quarter of next year extremely important for the company. And this time around, the most important thing in the third quarter results will be the fact that they will also announce an interim dividend. So that is something that the street will keep an eye out on. At 17.5 times, despite the run-up, the stock still offers a fair amount of value. What is the street working with? A near 4% decline in the company's overall revenue. That would mean close to around 11,560 crores on the top line. The EBITDA actually declines by a tad more, a shade, almost 7% on the lower end. That means margins of almost 37.1%, a near 130 basis points decline. And as a result of which, the net profit corrects by around 13.5%. The number you're looking at is around 3575 odd crores. The segments are most important in ITC. Tobacco likely to report revenue growth of anywhere between 0 to plus 3%. FMCG is likely to shine with a 10 to 15% sort of growth. Hotels still down year on year with a 50% cut, but some amelioration quarter on quarter. The reason why tobacco business sees a flattish sort of revenue growth is because the street is working with a 7 to 8% sort of decline in cigarette volumes, and with the price hike that they had taken post last budget, the realizations would grow around 8 to 9 odd percent, and that explains the flatness in revenues. Apart from FMCG revenues, we'll keep an eye out on FMCG margins. That is likely to improve just the way it has in the past.
Okay, Kunj, good afternoon. Your thoughts on ITC?
Yeah, so finally we are seeing participation coming in the stock in last few days, maybe up to about 15 days or so, after a consistent underperformance, not only over the last few months, more than 5-6 years. So let's see how far it goes. I'm still not sure whether it is that left out feeling and a small participation that has happened, or whether it is time for sustained re-rating, for which triggers still don't seem to be in place. For a sustained re-rating of the company, I think it's a return on capital. The capital allocation is something that will have to significantly change or improve. Something that we take an analogy or a parallel example from, let's say, M&M. Over the last 2 or 3 quarters, since management decided that yes, indeed, they are aware that the capital allocation hasn't been right, and they have been announcing not only intention but also actions to improve the return ratios. Something similar will have to be done to the ITC. Of course, this whole uh, pending issue of ESG issue also continues on the valuation of this company. So I think it could be something too early to say that a permanent re-rating is setting in.
I agree with that, and ESG isn't going away anytime soon. So if ESG is a headwind, then valuations are a tailwind. Let's see who wins. That's ITC for you. Let's move on to some other earnings expectations as well, and we'll hear from two auto majors, MRF, as well as Ashok Leyland. So let's bring in Sonia to give us the expectations on both. Sonia.
Well, thanks a lot for that. As you rightly pointed out, important numbers tomorrow. For Ashok Leyland, we're expecting a strong set of numbers. A revenue growth of 20% is what we're looking at 4,835 crores. This was a good quarter for them. Overall, the volume growth has been about 7% year on year, led largely by the light commercial vehicle segment, which did really well on account of their new launch, Bada Dost. But the MHCV segment is still under a bit of pressure. It's down almost about 8%. But the big boost in margins will actually come because of the sharp price hikes that the company has taken to pass on the BS6 move to the consumer. So margins expected to improve to 6.5% versus 5.6%. But I'm keenly watching out for MRF's numbers, because we had a cracker set of numbers come in from all the tire companies, SIAT, JK Tires and Apollo Tires. And MRF enjoys the biggest premium in this sector. So we are expecting a revenue growth, or rather Kotak has put out an estimate saying that there could be a revenue growth of 10%, EBITDA growth of 35%, and profits could go up by almost 70%. Now MRF gets 30% of its revenues from the OEM market, which is expected to rise about 10 to 15%, while it gets 70% of its revenues from the replacement market, which has done very well this time. In COVID times, a lot of people have replaced their tires rather than buy new ones. So I'm expecting MRF to do well. Only thing is that the valuations are very expensive. It trades at 27 times FY22 compared to Apollo and SIAT trading at 16, 17 times.
Okay, all right, Sonia, thanks very much for that. Kunj, actually, let me ask you about Ashok Leyland first, because Sonia also just told us that, the commentary from Eicher, at least on their commercial vehicle business, that's good. Those numbers look good. How would you approach a stock like Ashok Leyland now?
So, the results are tomorrow. Of course, you talked about it. What I would like to see that what the company says about the quarter coming ahead now, March and maybe June quarter also. Because for the December quarter, we already have the monthly numbers available to us, which were not as encouraging. Of course, January has seen some recovery. Partly was there in December also in the commercial vehicle sales. So as I said, more important is that what the commentary management gives for the coming next 2 quarters. Share price again, partly one in line with market, in line with auto recovery, in line with improving commercial vehicle sales. And because of the lack of opportunities at right valuations, finally the share price has moved up already too fast and too much. So I think that is where more than the result, which may not on the top line be as much growth. Of course, the bottom line could be better because we are seeing margin support coming in almost all the sectors because of the reduced commodity prices that were there, which is the scenario now also changing. Almost all the metal prices, all non-metal prices, all the commodity prices have been going up. So part of the compensation companies are taking by price hike, but that may not be enough for the margins to sustain. So as I said, the key things to watch out in management commentary will be the top line growth for next 1 or 2 quarters, margin guidance for the 1 or 2 quarters.
Okay, before we take our last break on the show, the Nifty is once again moved back in the green, and the mid-cap index is comfortably in the green now, almost 200 points higher on the mid-cap index. Just look at that move. So almost a bit of a double bottom intraday. 15,000 was tested twice, and both times the market really bounced back. And the second bounce has been actually very strong. It's taken Nifty above 15,100. So that really was a false breakdown. That's been the trend of this market. There have been dips, there have been plunges, but those plunges normally get bought. Before we move on, let's just address Eicher Motors numbers as well, because that stock has been struggling a bit. Last I checked, it was down about 1.5%. Yeah, there it is. Sonia, tell us how the numbers looking.
Well, Anuj, I'm not too worried about these numbers because the reason the margins are under pressure is because of higher raw material costs. That is what every company is facing. What I like about the numbers is that the Volvo Eicher commercial vehicle business is very strong this time. Revenue growth of 24%, margins improved to 8.6% versus 6.4%, and profits are up 89%. Also, the management has said that they've undertaken stringent cost-cutting measures which will help offset the margin pressures that they're seeing due to higher raw material costs. Also, the other commentary is good. Demand is very strong in both Volvo Eicher as well as the Royal Enfield business. So I wouldn't be too worried. Of course, the numbers are slightly below street estimates, but then raw material cost pressures is what the entire industry is facing. Otherwise, the commentary is quite good from the management. Back to you.
Okay, all right, Sonia, thanks very much for that. Well, on that note, we do have to take a very quick break, but we're not done with the previews just yet because ACC is also reporting tomorrow. We'll get in Nigel to give us the key expectations in that one.